Okay, imagine this. You get hit with a huge medical bill, totally unexpected, and it just wipes out your emergency savings.
Yeah, or maybe your car dies right before a big job interview.
Exactly.
Yeah.
And you look at your bank account, and there's not much there. Credit cards, maxed out. What do you even do?
It's a scary spot to be in, but honestly, it happens to so many people. Things are just unpredictable financially these days. And that's often where personal loans kind of pop onto the radar, right? Promising that quick fix, that cash to get you through.
Right. And looking through the material you sent over, it's really clear they've become this major financial tool for loads of people.
Yeah, super accessible.
For everything from tackling high interest debt to, covering those exact emergencies you mentioned, or even big life stuff.
But what really jumped out from the source material is how it frames them. They're not just good or bad. They're called a double-edged sword.
Ah, okay.
Super useful in the right hands, but also, as we'll see, really easy to mess up with if you're not careful.
Which is exactly why we wanted to do this deep dive. Our goal here is to really unpack, when is taking out a personal loan actually a smart move that helps you? And crucially, when does it flip and become this trap that can set you back, financially for years? We're using all that info you provided as our guide.
Yeah, we'll look at how they got so popular, the specific times they actually make good financial sense.
Right.
And then dive into the dangerous parts, the pitfalls. We'll cover the absolute must-know factors before you sign anything.
Okay.
Look at some real stories, some stats too, and tackle some of those common questions and maybe controversies around them.
So by the end, you, the listener, should have a much better handle on whether a personal loan is the right move for your specific situation.
Exactly.
Okay, so let's start with the history. How did these things become so common? Borrowing's ancient, obviously, but these unsecured loans, they're newer.
Yeah, the big change really kicked in during the 20th century, especially ramping up in the 80s and 90s. Before then, most loans needed collateral, right? Like your house or something valuable.
Something you put up, yeah.
But personal loans shifted towards being unsecured. Lenders started looking more at your creditworthiness, basically, your promise to pay back rather than just an asset.
And then came fintech, right? The 2000s, 2010s, that must have been huge.
Oh, absolutely transformative. Suddenly you weren't trekking down to the bank with piles of paper.
No more suits and waiting rooms.
You could do it online from home and getting the money. Sometimes almost instantly. That speed, that ease, it just blew the doors open on accessibility.
Wow.
But it's important, and the material really emphasizes this, to remember the human element behind it all.
You mean the stories?
Yeah, the stories. People using loans for college, for a down payment on a first home, seed money for a small business. These are, stories of hope, building something.
But there's always a flip side, isn't there?
Always. The material has those stories too. Heartbreaking ones. Businesses failing, the loan becoming this massive weight, or people consolidating debt.
Oh, and then running up the cards again.
Exactly. Doubling their debt burden. It's that sort of emotional pull in both directions that makes understanding them so critical.
Okay, so let's focus on the positive first.
Yeah.
When can a personal loan be a really smart financial choice, according to the sources?
Well, the number one example, the one cited most often as a wise use, is debt consolidation.
Right, tackling that high-interest debt.
Especially credit cards. Rates can be astronomical, like 20% or more.
Yeah.
So the idea is you take out one personal loan, hopefully at a much lower rate, and use it to pay off all those expensive cards.
And the savings can actually be pretty significant.
Oh, definitely. The material gives this example, Sarah. She had $15,000 scattered across 5 credit cards, high interest.
Okay.
She got a personal loan at 9.5% to pay them all off. Over 3 years, that saved her over $4,000 just in interest.
Wow, $4,000. Plus, it must make life simpler, right?
Yeah.
One payment instead of 5.
Exactly. Much easier to manage. So what's another good use case?
There's emergency expenses we talked about at the start.
Right, the unexpected stuff.
Medical bills, car breaking down, urgent home repairs, maybe even emergency travel if you genuinely don't have that cushion saved up.
A loan can be that lifeline, yeah. But there is a key piece of advice here from the source material.
What's that?
Always compare. Before you jump on the loan, check its terms against other options, like maybe even using a credit card just for that specific emergency if the terms are better short-term. Don't just assume the loan is best.
Good point. Compare everything. Okay, what else? Home improvements came up.
Yes, this is interesting. The idea is that using a personal loan for home upgrades can be smarter than sticking it all on a high-interest credit card.
And potentially it adds value to your house.
Potentially, yeah. If you choose the right upgrades, it could actually increase your home's value, making the loan feel more like an investment. There's a quote from a financial advisor, Mark Singleton.
Oh, yeah. He says, if used for home upgrades, personal loans can be an investment rather than a liability. Makes sense.
It does. Okay, and the last one mentioned was big life events, planned ones.
Right. Things like, say, a wedding, or maybe moving expenses, or even starting a small business, that initial capital.
So things you know are coming.
Exactly. And the material suggests that if you plan carefully, a loan can help you sort of bridge the gap for these big anticipated costs.
So the pattern seems to be using them strategically, like to save money, cover unavoidable stuff, or invest in something with potential value.
Precisely. Not just for, instant gratification.
Which brings us perfectly to the flip side, the warnings. When should you absolutely not take out a personal loan? The material seems pretty clear that just because you can...
Doesn't mean you should. Absolutely. Yeah. There are situations where it's basically setting yourself up for, as the source puts it, financial disaster.
Okay, like what? What's the biggest warning sign?
Probably the biggest red flag is using a loan just to fund a lifestyle you can't actually afford. You mean like vacations, fancy clothes.
Exactly. Non-essentials, designer stuff, gadgets, borrowing purely for consumption.
Yeah, that example of Ahmed borrowing for the Turkey trip really stuck out. The fun fades, but the debt.
The debt stays, and he was struggling just 6 months later. It just traps you in this awful cycle.
Using debt for things that don't last or just disappear. Okay, what's another major risk?
Taking out a loan when your income is shaky or your job isn't secure.
Seems obvious, but worth saying loud and clear.
Definitely. These loans demand fixed, regular payments. If your paycheck isn't reliable, making those payments becomes incredibly stressful, and missing them.
Big trouble for your credit score, right? Penalties, too.
Huge trouble. Destroys your score. And speaking of risk, the material is crystal clear on this. Borrowing for gambling. Or highly speculative stuff like, volatile stocks or crypto.
Oh, boy.
It calls that playing with fire because you have to pay back that loan no matter if your bet wins or your investment tanks.
That's just asking for trouble. And the last warning was about bad habits.
Yeah, basically using a loan as a Band-Aid for poor financial discipline.
Like if you just keep overspending.
Exactly. Or if you have no budget, no real plan for paying it back, the loan doesn't fix the underlying problem. It just, as the source says, delays the consequences.
And makes them worse, potentially.
Yeah.
There was a quote, Susan Gray.
Yeah, a really stark warning. Taking a loan without a repayment plan is financial suicide.
Wow. Strong words. But it hammers home the need for a solid plan.
Absolutely essential.
So, okay, before anyone even clicks apply, what are the absolute must-check things? The material laid out a kind of checklist.
Top of the list. Interest rate and, crucially, the APR.
APR, annual percentage rate. Why is that the key one?
Because APR isn't just the interest. It includes the interest plus any fees the lender charges, origination fees, processing fees, whatever. It's the true cost.
Got it. So always compare APRs, not just the flashy interest rate.
Always. Next up, loan tenure. How long you've got to pay it back.
And there's a trade-off here.
Yeah,
right?
Big trade-off. Longer term usually means lower monthly payments, which feels easier on the wallet month to month. But you end up paying way more in total interest over the years. So you need to find that sweet spot, a payment you can handle. But without stretching it out so long, you pay a fortune in interest.
Makes sense. What if you want to pay it off early? Save some interest.
Ah, good question. That's where you need to check for a prepayment penalty.
A fee for paying early. Seriously.
Some lenders charge it. Yeah, that's how they guarantee their profit. But the material notes that a lot of the online lenders especially are getting rid of these penalties.
Oh, that's good to know. A potential advantage there.
Definitely something to check. And finally, the big one that affects everything else, your credit score.
Right. How much does that matter?
Hugely. Your score tells lenders how risky you look. The material says a higher score, think 700 plus, is pretty much essential to get the best, lowest interest rates.
And if your score is low,
you'll likely still get offers, but the interest rates will be much, much higher. It makes the loan way more expensive. So if your score isn't great, it's often worth trying to improve it before you apply.
Okay, so those are the key checks.
Yeah.
It's interesting to see how this plays out for real people. The material had stats and case studies.
Yeah, both. Big picture, the global market for these loans is massive, like over $500 billion this year, and still growing.
That's huge.
And locally, the source mentioned that in Pakistan, bank personal loans jumped over 12% in 2023. Why? Mostly because inflation and rising costs were squeezing households.
So economic pressure directly leads to more borrowing. Makes sense.
And the individual stories really highlight the points we've made. Remember Nadia, the teacher in Karachi?
Yeah, she used a loan for debt consolidation, right? The smart way.
Exactly. But the key wasn't just getting the loan. She worked with a financial coach, got super strict with her budget, really focused, debt-free in 2 years.
So the loan was a tool, but her discipline made it work.
Precisely. It was a bridge, not a crutch. Now contrast that with Rizwan.
He was the one who borrowed for a business, a mobile shop.
That's him. Borrowed 1 million rupees. Seemed like a good idea, right? Entrepreneurship.
Yeah, but then COVID.
Yeah, lockdowns hit his business hard, couldn't make payments, defaulted within 6 months.
Ouch. And the consequences.
Pretty severe. Banks took legal action, and his credit score absolutely tanked below 500.
Wow. That's a tough lesson. Even with a potentially good use, external risks are huge.
You have to factor in risk, economic shifts, especially for something like a new business. It just shows how much depends on the borrower's planning and circumstances.
Okay, let's tackle some of those common questions or debates the material raised. Like, are personal loans just flat out better than credit cards?
Well, the material suggests it's nuanced. They can be better if used smartly. Lower rates sometimes, fixed payments you can budget for. That's good.
Well,
But they're not risk-free. That fixed payment can be unforgiving if your income drops. Misusing them can be just as bad, maybe even worse than maxing out credit cards.
okay. What about all these online lenders popping up? Are they dodgy? The material mentioned concerns.
Yeah, that definitely came up. Look, many are legitimate, but the source warns about the instant loan hype. Sometimes the speed hides nasty surprises.
Like hidden fees.
Exactly, fees that jack up the real cost, the effective APR. The source mentioned cases where the APR hit like 40 or 50%.
50%? Wow.
Shocking, right? So the advice is crucial. Read reviews, dig for every single fee, and read the entire fine print. Don't get rushed.
Absolutely critical. Okay, last question here. Can these loans actually help you build credit?
According to the material, yes, they can. But, and it's a big but.
Only if you pay on time.
Exactly. If you make every single payment on time, it adds positive history to your credit report, shows you can handle installment debt, diversifies your credit mix. That can boost your score.
But if you default,
Oh, if you default, it does the complete opposite. It absolutely wrecks your credit score, seriously damages it for years, makes getting any other credit incredibly difficult.
so it really cuts both ways.
It really does. Which brings us back to the main message from all this analysis, doesn't it? Personal loans are just tools, powerful ones.
Neither good nor bad in themselves.
Right. And the material's final thought really nails it, I think. The difference between using one smartly and falling into that debt trap. It isn't just about the loan's interest rate or the term length.
It's more about you, the borrower.
It's about you, your financial situation, sure, but also your mindset, how well you plan, and your discipline, sticking to that repayment plan.
Yeah, that advice about using them to grow, not just survive. That really resonated.
Definitely. It leaves you, the listener, with some important things to think about for your own finances. Like we talked about emergencies. What are the alternatives to a personal loan you should really explore first before borrowing?
That's a great question. Or if you know your credit score isn't great right now, what practical steps could you actually take to improve it before you even look at loans? That could save you a ton of money in the long run.
Yeah, definitely things worth chewing on as you navigate your own financial path.